fact that we have a pro-European president dedicated to, for instance, complying with the fiscal rules of Europe, that, in a sense, is enough to a lot of investors.
So why did the markets take this so calmly? Kate Moody's been finding out. Kate.
Well, Stephen, one of the best ways to gauge how investors view geopolitical or other risks is to look at the so-called volatility or fear index. There are several different measures, but the most cited is the VIX index, which tracks expected turbulence on the S&P 500. Over the last 12 months, concerns spiked around the time of the Brexit referendum and again at the time of the US elections. But after Macron's victory, tumbled to the lowest level in over 2 decades. The index is down over 30% since the first round of French voting. As volatility dropped, so did demand for safe haven investments. Gold prices, which often serve as another barometer of fear, fell back slightly as risks appeared to dissipate. After rallying to historic highs in the wake of the first round, global stock markets took Macron's victory in their stride, though they might have plummeted had his opponent claimed an upset. CAC 40 in Paris climbed around 8% in 2 weeks. So why are markets so calm despite huge amounts of uncertainty around the world? It's partly because French and recently Dutch voters have pushed back against the wave of far-right populism. Donald Trump has pleased investors by moving ahead with plans to cut taxes and loosen regulations, while some stability in the price of commodities like oil has also helped. Analysts warn it's far from smooth sailing ahead, though. Elections are looming in Italy and Germany, and once again threatening to destabilize the Eurozone. Brexit negotiations and the decisions taken by the Trump administration will play into that, as will Emmanuel Macron's ability to govern. Central banks' policy decisions could become increasingly crucial in driving markets and sentiment. Low interest rates tend to lead to low volatility and vice versa. Some experts predict the markets could be in for a shock. Others argue that the sheer number of geopolitical risks may cushion the impact of any one event. Stephen?
Kate, thank you very much for that. Next, are unicorns at risk of becoming just regular horses? The term unicorn, meaning a private company valued at over $1 billion, was coined to indicate something special. But the number of these firms has exploded in recent years, with the research firm CB Insights estimating there are 193 of them galloping around. They include the likes of Uber, Spotify and Airbnb. There are some signs that the growth in unicorns is slowing down, though, after a drop in major financing deals last year. Unicorn status remains a significant milestone for growing companies, though. One firm that's hoping to get there is Intercom, a messaging platform that connects businesses to consumers. Des Traynor, you're the Chief Strategy Officer and co-founder of Intercom. Thanks very much for being with us.
Thank you for having me.
Is unicorn still a significant milestone for companies? Is it something that you still aim for when you're building a firm?
When unicorn, the word came out, it was a few years ago, and all of a sudden everyone wanted to be unicorn. And you saw all these suspicious valuations where like companies were, previously they might have been valued at 950, 970. Now it's all on the dot $1 billion. So I think there was some degree of a bit of buzz around it. I think of late, people are looking for a bit more credibility. A lot of these unicorns have transpired to be worth less than $1 billion in later rounds. And also, I think we're seeing a lot of companies actually share their own revenue metrics and show a very credible path to being a successful business without necessarily disclosing a valuation or saying we are quote-unquote unicorn yet. So I think the buzz around it was higher a while ago. I think today it's more about have a credible business. If you want to disclose your valuation and it's credible and meaningful and not built on hype, great. Other than that, show us some reason why you're credible and people will be attracted to you from a recruitment point of view, from a potential customer point of view.
So 6 years ago, you started Intercom. You've grown the business massively since then. Tell us about the journey that you've gone on in that time.
So we started out as 4 people on a small street on the side of a dodgy part of Dublin. Today, we're like 3 offices around the world with 330 people. We closed January just recently with $50 million in recurring revenue. And it's been quite a roller coaster along the way. I think we started small. We ran for a year without making any money, being as frugal as we could as well to offset it, because you're losing a lot of money when you're not charging. But like, yeah, over then it's just been a case of adding talented managers, adding hundreds of employees, obviously, we have now 17,000 customers. We've got all the new cool startups. We also have some of the sort of more strengthened, tenured companies, the Microsofts, the Shopifys, the Stripes. But it's been quite a journey for us.
And Intercom's an Irish company. You've also got bases, though, in San Francisco, too. So is it important when you're looking for funding at the start to go to Silicon Valley? Can you do it without doing that?
So whilst the four founders are Irish, we did go to America to incorporate. And the reason we did that was because we believed that it would make us more credible with American investors. At the time, it was certainly true, and I think there still might be some truth today, that the venture capital, they're willing to take higher risks at higher valuations in America than we were certainly seeing, as I said, on a small street on the north side of Dublin. So at the time, it certainly made sense. I haven't started a company recently in Europe, so I do believe a lot has changed, especially a place like France, the UK as well. There's been genuine uptick in the amount of capital out there. But I do think all of the brand name venture capital companies, the Sequoias, et cetera, they're all over in California, and that's why people tend to go there.
Now, Intercom has released a book on the success of kind of making a success of being a startup. What sort of lessons have you got in there?
It's kind of everything from what you should look for in your first employees, understanding that kind of a startup it's not like a restaurant where you have to add a second one. The scale of the internet is incredible. So if you build a product that one person can use and you put it online, hundreds of thousands of people can use it instantly, and that creates all sorts of wonderful revenue opportunities, but also loads of challenges in terms of being disconnected from your customers. So there are, obviously we have 17,000 customers. I haven't met them all in the same way, somebody who runs a coffee shop might. So the challenges generally tend to be, how do we keep our customers engaged? How do we keep them sort of happy? And how do we keep that recurring revenue, which obviously is fueled by loyalty? That's one of the things that people, I think, make the biggest mistake on. For years, business was you kind of overpromise and underdeliver, and it doesn't matter because you've got their money anyway. The shift that we've seen with internet business models, whether it's, if you take something like Spotify, where instead of buying your music up front, you now pay for it every month, and they have to satisfy you every month to get your money. That is a fundamental change in the nature of commerce, and that's something that I think a lot of people need to learn when they actually go for an internet-powered sort of business model, and that's what we focused on a lot in the book, because it's one of the things Intercom helps with.
A lot of startup founders talk a lot about the importance of failure. Is that something that kind of factored into the Intercom story?
It's interesting. I think failure gets a good rep. People talk about failures, and you should really get that out of the way. And I'm like, well, what if we don't? I think you have to have permission to fail. I think in general, most technology companies are trying to do something that hasn't been done before. So failure is quite a high probability. You hear stats like 80–90% of startups fail, and for a very good reason. Very credibly, I see this happen all the time. However, I don't think it's something, permission to fail is one thing. Chasing failure, I'm not so sure is a great strategy. And unfortunately, I think people can get the two blurred a little bit.
France is one of your big markets. We've had a new president, Emmanuel Macron, elected. Do you think that will change the business environment in France?
I think, France is our fifth biggest market, and it has a phenomenal technology scene. It has unicorns like Carroll, all phenomenal startup scene here over the last 2–3 years. A lot of our customers are very popular French startups. I don't anticipate anything to change massively one way or the other. I think if you're inspired to start a technology company, kind of independent of president, you would be inspired to do it. I think possibly business will be a bit easier. I think maybe bringing talent into the country will be a bit easier. But I don't anticipate a massive swing. I think France is in a very good place, and it should feel pretty excited about what the future holds technology-wise.
Okay, Des Traynor, co-founder and chief strategy officer at Intercom. Thank you very much for coming in to speak to us.
Thank you very much.
Next, to a subject of much debate among wine drinkers, the best kind of stopper for a bottle. Over the past 15 years, traditional corks have been replaced by plastic stoppers and screw-top bottles. But in Portugal, the world's biggest producer of cork, the industry has been fighting back. Pierre Darlieu reports.
Once tainted, Portugal's cork industry is making a comeback. 10 years ago, the world's largest cork producer, Corticeira Amorim, was struggling to survive. Its main customer, the wine industry, was flirting with cheaper products that threatened cork's dominance, namely screw tops and plastic stoppers. And many premium winemakers had rejected cork, blaming it for occasionally tainting wines with a moldy taste. But that was then.
I think when you go back 12, 14, 15 years, the forecast for cork was anything but optimistic. And I think where we are today, it's a completely different territory.
Portugal, which produces more than half of the world's corks, saw export revenues fall nearly 30% between 2002 and 2009. In the past decade, the industry poured over 500 million euros into new equipment, technology, and research to combat the negative effects of natural cork stoppers. Now it's focusing on premium wines and quality in what has become a much larger overall market.
The trends are very clear. The wine consumption in the world it's moving from volume to value, so we are having less consumption but better consumption, I would say. The consumers all over the world have a huge preference for cork stoppers.
With over 500 factories and about 20,000 workers, Portugal has a lot riding on the fight between cork and plastic stoppers. For now, cork seems to be winning the battle, with the industry's export revenue expected to reach an all-time high this year.
And that's it from us for now. If you'd like to share your thoughts on the stories that we've been covering, get in touch on Facebook at France24 Business, or you can tweet me at NewStephen. Until next time, thanks for watching.